Hi, good afternoon. This is Michael from Back to the Future Trading, and I wanted to share with you something that I've been looking at here. I'm studying the charts before I go on a trip with my younger son, Evan Michael, and we're going to science camp, which is a little complex for grammar school kids down on the shore of North Carolina. And so before I left, I was hoping to share some insights that may be useful, maybe not. They were useful last week in the Emini S&P, and see what you make of this. Maybe your own research will confirm what we were seeing about a week and a half ago, I think. We had in a prior video told everyone to watch for this candle right here, and then a reversal of the Emini S&P up until the bottom of this green box and possibly the top of this green box. And that setup actually net in a trade I showed on Friday, $25 on one contract, and I believe $27 or $29 on the second contract, directly from the bottom of this move. We're using the FLUX Daily Cycle Marker predictive indicators to tell us when things are coming up in the future. But in addition to that, I'll put a link to the class that we taught about this in the description if you want to go back and see that class that we taught where we made these predictions and what these different dots mean. I wanted to call your attention to the spring pattern. This is spring of last year, and it looks very similar to what's taking place here between March and April a year later. And the thing that makes the technique I'm about to show you so powerful is the anchoring of the flux time cycles in relation to structure. So for example, last year we had a phase 1 and a phase 2 right around April 22nd. This year the phase 1 and the phase 2 came in at March 6th and March 13th. And you'll see that I've put these two triangles here to show the lower high formation at the phase 1 and phase 2. We had that higher peak and then the lower high just after the phase 2 in 2016, and then in 2017 we had the new high followed by the lower high in 2017, and then the phase 3 predicted the drop. Well, in 2016 we also had the drop into the phase 4, and we talked about how the phase 4 in 2016 was a stop run. That's where banks try to make people think that the markets are going to go down, only to reverse and go back in the other direction. And that led us to our prediction about a week and a half ago in terms of calling this date, which was, I believe, specifically a Monday. I can go back and check. Yep, it was a Monday. And we told people when you get to Monday, the low will be in, and then we're headed back up. Well, we're at the phase 1. In the upper right hand corner you'll see that the phase 1 is complete in 19 hours and 52 minutes, and it's 9:22 on Sunday night Eastern time. So 12 hours from now will be the US Open. So you can see we're right in that phase 1 area. Well, come over here and take a look at the 2016 pattern, and what you'll see is that the phase 1 brings us back towards the lows of the stop run. In fact, the day of the phase 1 in 2016, the day of that signal, opened and then dropped $16 where it closed, but from the open of that candle it fell a total of $20 down. Okay, so over here I want you to see in 2016, from the high, which was a touch of a trend line, all the way down to the low by the phase 1 and the phase 2. Well, if that holds water at all, I want you to see where the resistance could come in. Okay, and this is just how my mind works. If it doesn't make sense, I'm sorry. The phase 4 and the phase 3 of 2016 had a cluster of lows right here. That's where the support was. Okay, and you can see that there's these really big long wicks on the bottom where banks surged down and came in. And if you pull that support over, it kind of covers where they pulled back to for the phase 1 and 2 before the launch into the new highs. Well, if we look over here, the wicks came in right around over here, and then those plunge candles also had support over here. One of the things in the Trump trade, the Trump trend rather, that I've noted is that a lot of the retracements are weaker than years prior or years past, and so it's hard to bet against the bulls in this market, but the structure always comes out the same. They favor the long side versus pounding down equally on the short side as they did in the past. So I would watch for the ES to pull back down into 2350 area, 2352 minimally, and then within the next 8 to 10 days coming back down into the 2335 area, 2340, 2335. The absolute low of the pattern going back into 2016 and again 2015 is this phase 2. That's what comes up next. So tomorrow is the phase 1, and then about 8 days after that is the phase 2, and that seems to be where we're going to see the launch or the attempt to launch back up into new highs. If you stick with me just a few minutes more, I'm going to take you back to 2015, and I want you to see how that same pattern plays out. Again, here's March, here's April, and I'll strip away some of the annotations that I've made, and I want you to see that in 2015, this is 2 years ago, that by the phase 1 we had already come back down into the lows of the phase 4. Right? We'd already come back down into there. So we had the lower high and the higher high, just like here, the lower high and the higher high. Then we had the drop, just like we had the drop. Then we had the move back up, and then the market fell back down by the phase 1, and the phase 2 was the launch back up into the newer high. Right? So that happened in 2015. Pause your screen, take a look at it. Okay. Now this happened in 2016. Do you see how it's the same pattern? And again, when we have the phases to anchor us, the predictive phases, we see that the phase 2 is the launch. Phase 1 is one more fishing expedition back down into stops, large pin candles, large wick candles, but then phase 2 we break through that upper trend line into new highs in both 2016 and 2015. So keep your eyes open tomorrow for a potentially short day. Tomorrow being Monday, April 3rd, 5 days from my birthday. Yay! My mother-in-law came over this week and preemptively invited us to a London broil dinner on Saturday. And not having my parents around, having them have passed away early, I'm actually looking forward to it. It's nice having somebody in your life who is thinking about you and wants to brighten up your day. So I hope you have somebody like that in your life. That's my prayer for anyone listening to this video today. It's a good feeling. So that's what we've got on the horizon for the ES, and I'm really curious tomorrow to see if we open and we have a continued pullback down into the lows of the phase 4. So aggressively, I'm looking for support here. Conservatively, I'd love to see it pull back, but I've spent a lot of time wishing this market would pull back when it just takes off and runs. So phase 1 to phase 2, over the last 2 years, historically, the market goes into a range. You see right here in this box, look at the candles. I'll make the yellow a little lighter, and I want you to see that the market goes into a range where we have big pin candles up top, and then we have the big wicks down below too. So when you start to see that, when you start to see those wicks, it'll define the range. And right now on this chart, the only place we've seen those wicks is here. That's where those deep dives took place. Okay, so in terms of the range of the ES, if I were to correlate those two patterns, here's what I'm looking at right now. It's a slightly larger range than the one in 2016 and the one in 2015, right? Historically, when I work with time cycles like this, I have noticed that once we're able to identify the range, there's a very important bisector that we need to look at. And so one thing I would greatly encourage you to look for is the 50% retracement of this range, and that has us right at 2350. So right now there's about a 9-point deficit, an arbitrage, I think. I think there's a gap here that's going to get filled back to 2349 minimally. Underneath that, the next place to look for support is 2340. 2340. Generally, when you have the range like that, if you split it up, WD Gann told us to look for resistance at the 50% retracements of time and price. It was the most important, according to him. And so once we've identified this range, we can start to split it up, and you'll see that we've already got support here at 50, 57, 75, 58. Again at 50, that's the big one. Down here below at 2341 as well. So if we're at the close of the phase 1 tomorrow at 2350, expect a bounce. If we're at the close here near 2340 tomorrow, expect the bounce off of that area. Okay, but ultimately where we are in relation to these lines when we get to the phase 2 in about 8 more days will tell us where that launch point is coming from. Let's take a look tomorrow at the 60-minute forecast on the ES. You'll see that we've got a range pattern as well on the 60-minute chart. This is a traditional flux histogram forecast, and these signals are the times where the software was telling us to wait for a certain move at a certain time in a certain direction. And the last signal that we had an alert from was 11 a.m. on Friday. And these are all Eastern times, by the way. So the 11 a.m. signal came to us via the histogram down below. Now, this next one kicks in at 10 o'clock p.m. tonight and 3 a.m. Monday morning. So these are all Eastern Daylight Time, EDT, Echo Delta Thomas. Echo Delta Tango is what I meant to say. So as we come into the 10 p.m. candle, it's 9:33 right now. I'm expecting another green dot, and then the one after that is coming at 3 a.m. Eastern time, and I think that's 7 or 8 o'clock London time. The very next signal after that is 1 p.m. tomorrow. 1 p.m. tomorrow. There is, if we enlarge the histogram, another bump right here. So this would be 1 o'clock, 12 o'clock, 11 o'clock, 10 o'clock, 9 o'clock, 8 o'clock. So 8 to 9 o'clock tomorrow, there is the potential Eastern Daylight Time for selling pressure as well. One of the things I'd like you to look for, if we're going to get the drop tomorrow in the ES as per the phase 1 on the daily chart, I'd like you to look for the close of that candle. Notice here when it's time for a buying cycle, how price stays above the dot. I have my dots set 3 ticks above and below the high or the low of the candle. Okay, so tomorrow, if you look at the close of the 3 a.m. candle tomorrow, let's presume that it's somewhere over here. I'm not sure. I'm just using this as an example. I want you to take a chart marker wherever the low of that candle is, the wick or the close of the candle, and I want you to put a green dot on your chart, 60-minute chart, 3 ticks below the low, either the wick or the close of the candle, whichever is lower. And then I'd like you to take a line and draw it through the dot. If we come into 8 or 9 o'clock tomorrow before the open, and you see that a candle is either closed below or pierced that level, wherever that dot is at the close at 3 o'clock tomorrow, I won't be here. I'll be getting ready to get on a bus, so I won't be able to tell you this, but that would be a very important sign that there's weakness, meaning the banks had a chance. It was time for them to buy. It was their own schedule they were following, and they chose to let it fall. That could be a very strong sign that 8 to 9 o'clock tomorrow could be a big drop right after that. So please be aware of that schedule moving forward. The market you trade is not random. These histograms are available to anyone who has the idea that the game is rigged and they want to spend some time examining the patterns of the banks to see if they can't do what they do when they do it and take advantage of their weakness, which is repetitive behaviors. I'd encourage you to click on the link to take our video demonstration or visit us during any one of our weekly webinars where we go into the exact patterns that the banks are going to follow, more likely than not, hopefully, moving forward. If this chart is any indication, and it's pretty representative of what we usually see, I think that you're going to really like what we have to teach you. Thanks again. I hope you have a great trading week this week. If I don't hear from you or I'm unable to get you another review video before I see you next. But otherwise, it's a privilege and an honor sharing what I know with you. I hope that you were able to learn something about the spring pattern, about the ES today, and we'll see where things end up. Thanks again. Take care. Have a wonderful week.